And China's stock market has been on a huge bull run. The Shanghai Composite Index has gained over 80% since last November. In the meantime, however, China's economic growth has slowed. The latest reading had first quarter GDP at 7%. Guan Yang investigates.
Recently, China's Securities Depository and the Clearing Corporation lifted restrictions on trading accounts that individual investors can hold. Instead of one, an investor can now have as many as 20 accounts that trade in the market for A shares. This, coupled with the bull run in the local markets, has millions of ordinary people looking to get in on the action.
The number of new brokerage accounts has surged since the bull market started running. Last month, our company hit a 5-year high for new accounts. Many of the newcomers are in their 20s and 30s.
Away from the trading floor, though, it seems that the Super Bull has very little to do with the real economy, especially in a region like the Northeast. Oil reserves have shrunk, coal prices continue to fall. State-owned enterprises or SOEs are struggling as many attempt to restructure. But there does seem to be an upside. When Premier Li Keqiang recently visited China Northern Railway Group ahead of its planned merge with China Southern Railway Group, shares in China Northern shot up by over 60% in just 1 week. The company is one of the largest SOEs in the Northeast. A successful restructuring could make it a role model for other deals. According to analysts, it is deals like this that link the booming stock market to the real economy. It might be slowing now, but long-term investors expect to reap a healthy dividend.
Although major economic indicators like the CPI and export-import data did not look good in the first quarter, there is a relationship between the real economy and the stock market. In a circular economy, there is usually a lag between the booming equity market and real growth.
Officials are hoping that analysts are right. This week, a local think tank invited the country's richest billionaires to attend the summit with the aim of generating new business for the region. The event was also a boost for the local investors.
I think the current bull market will have a positive impact on the region's real economy. As a private investor, my confidence is growing as the central government pours liquidity into the market.
So investors are counting on institutional support for the economy flowing through the bull run. The question in the Northeast is, when will the bull run flow through the real support for the economy? For a region like the Northeast, whose economy continues to lag behind the rest of the country, many are wondering if the rising stock market can really help. Possibly yes. If the giant listed companies can use their capital inflows to optimize their operations and drive the overall development of their respective industries, the Northeast can still be of great significance for China's real economy. Guan Yang, CCTV, Shenyang, Liaoning Province.